Hello everyone, this is Prerna from Al Circle, and here we are once again with episode number 8 of Breakfast with Jorge, your metal insights. So we have our speaker, Mr. Jorge, the LME expert. Good morning, how are you?
Good morning, Prerana. Good morning, Al Circle. Good morning, India. Good morning, world. Yes, as you always ask me, and imagine mate once again having for breakfast.
Okay, so I saw that you were in PDAC convention Toronto, so tell us something about that experience.
Yeah, I've been to Toronto in Canada. There was a convention, the PDAC convention, which is the largest mining conference in the world. As you may imagine, it was fully crowded. And when you see the attendance to be that high, is because there is a huge interest, particularly on minerals which derive in aluminum, which is the bauxite and the alumina, and mainly copper. And I saw, compared to the previous year, a huge interest in the mining industry in copper. And the new, I'm from Argentina, the new outcome from Argentina, which may become, in a number of years, the second largest supply of copper after Chile. And it's very, very important.
Okay, so what about the metal prices during those last 2 weeks?
Well, as far as the prices, this week we had, compared to the last 2 weeks, the news on the war in Iran, which is a key driver. Talking about just prices, the aluminum went over 3,400, the copper close to 1,300, stay stable around that area. The close it was 12,870. Then we had the nickel around 17,500, the lead in 1,950, and finally the zinc around 3,300, more or less that value.
So now that we are all aware about the conflict in Iran, so what impact do you see on metals, particularly on aluminium?
Yeah, let's talk about that. So I would say, from the global point of view, the area, the region, which is impacted by Hormuz conflict, which is the way out of the aluminum to the world. I'm talking about aluminum, of course. It represents a huge portion of the aluminum ex-China, and it's 23%. It's huge. It's $7 million. That is to say that out of the $30 million of aluminum demanded by the world ex-China, 7 million come from that region. And in particular, the Iran as a country produces 500,000, a little bit more than, it's around 550 or 60,000 tons, which is a huge, very high amount.
Okay, so what about the premiums on aluminium?
Yeah, of course, as focusing on the premiums, because you remember, you have two components on the price. The price itself, which is a price discovered by the LME in this case, which works throughout the world. It's a common price for the world. And then there is the adjustment, the additional on the price, which is the premium, which is another variable which reacts rapidly to the supply and demand. In this case, is the supply. Just to give you an idea, in Europe, the premiums were stable around $340 per ton. They went up $100. Now they are doing $440 per ton, $450 per ton, which is almost an 18% increase. It's important. It's really huge.
Yeah, so what's your view on the short time term?
Well, as far as my views, we have the nearest benchmark. It is when the conflict between Russia and Ukraine started, that the aluminum went up immediately from 2,500 to 3,850 and peaks of 4,000 and more, and a structure of huge backwardation, meaning that the price, the spot price, the nearby price was in the futures market was much higher than the future price. So that is demand related. So when we always speak, the component of a price is built up of expectation. So in this case, the expectations go to the nearby price. So if you ask me, I mean, it pretty much will depend on how long will this conflict be. When the conflict between Russia and Ukraine started, there were huge expectations that this conflict will last long. So you see how many years we have so far. As far as this conflict is much bigger in terms of involvement, because it involves directly the USA, directly the Arab countries, and you saw the hostilities between countries other than the United States. And we may say, we don't know, but we may say that probably this conflict will will last shorter. But anyway, where could the aluminum go? Can it go to 4,000? Yes. When? Short term? Absolutely yes. Whether I expect, I am asking questions for you, whether I expect the spreads between the nearby prices and the future prices, the carries, to go higher in terms of backwardation. Absolutely. We can probably see $200, $300 backwardation, which would mean, as an example, that the cash price of aluminum goes to 4,000, while the 3 months price goes to 3,700, which is around the corner. So mainly those are my views.
So what lessons can we share with the audience?
So on the lesson side, if you are a consumer, short term, you should definitively watch how to hedge yourself in terms of buying futures very quickly in order to protect the shorter term period of demand of the physical, that would imply from now until June, July, August to be covered. In terms of a producer, it's a little bit more complex, and at the same time, there are more opportunities, because if you are a producer, in view of this environment, in view of this economical context, you may say, I stay unhedged with no protection, speculating on the prices. But again, the increase of the prices. But again, that would be for a shorter period of time. So perhaps if you have a bullish view, you may not hedge. Or alternatively, what you can do is hedge throughout two alternatives, which I call them dynamic hedging. That would be like selling out of the money calls, which of course doesn't give you a direct protection. That gives the other one the right to buy from you, but you get a premium, and the volatility it's coming very high. I mean, it was very high on the copper, now it's very, very high on the aluminum too. We go from very high to extremely high, you know, and in that way you may hedge selling some calls, which of course it's not an absolute protection, because it's the other one who has the right on you to buy from you at a certain price, but you get a premium not on the physical, a premium on the call, and you can build up collars, which is buying out of the money puts just in case the prices come down again, which I don't expect them to go. Selling calls, and if you don't want to sell calls, buy some puts, or do some mix, do some futures, do some collars, sell some calls, and to prepare a mixed structure that would be at the time based on the present conditions, conflicts. And let's not forget that behind that there is a huge demand, potential demand on copper and aluminum based on this new revolution called artificial intelligence, and that will be my advice.
Okay, so likewise, that's great.
Oh, thank you so much. It was a pleasure once again to be with you. See you in 2 weeks' time. Bye-bye.
Thank you, Jorge. Thank you all for watching the full series of episode 8. Stay tuned with us for the regular metal market insights. Till then, put your comments on the comment section below. Bye-bye. Thank you.